Shannon, I want your thoughts on the reversal that we had, because it was such a stunner, and certainly in the magnitude of which stocks rebounded. FundStrat's Mark Newton says he's near-term constructive. A long bias still seems correct. Pullbacks should be buyable. Further strength up to 3,800. Make sense or no?
Yeah, I mean, I think if you're looking, it depends on your time horizon, Scott, which I know our viewers have heard from us over and over again. Buyable for the next couple of weeks, perhaps. Buyable for 6 to 9 months from now, probably. I still continue to think that we have a couple more weeks here where we're going to see these sharp reversals, potentially intraday, and perhaps not to the magnitude we saw yesterday. But there really is a feeling that investors are trying to position ahead of what the first quarter of 2023 looks like. We've got earnings season that can either be a positive or negative catalyst here. I do think that there is some credibility in the thesis that companies now have an expectation of these higher rates at a higher level throughout next year, as well as higher costs and a stronger dollar, especially with what's happening in Europe and the slowing of the recovery there. So if you look at that, from a guidance perspective, if we're coming out of this earnings season and guidance isn't nearly as poor as anticipated, that really could be the catalyst for November and December. We're coming out of the midterms. And so from a buyability perspective, I don't know if I would say yes to, this bounce is buyable for the next 2 weeks. But I certainly think that we're getting down to levels where investors are probably looking at a reset and reallocate, making sure that they've got the appropriate fixed income exposure. But looking at specific industries in particular that could be poised for a bit more strength in the last 8 weeks of the year, you probably want to be selective during this time period, but not an all-in call, if you will, on the equity market as compared to what you could get in the short-term treasury market.
And this is not by any means an all-in call by Newton. It's a more short-term call. He says that, Rob, bounces will likely prove short-lived, might not exceed 38.50 before a pullback back down to the lows gets underway. So he's looking for, okay, you could get a couple hundred more S&Ps out of this, but we're probably going back to the lows. You could get a flush of 32.50 to 3,200. Not immediate base case, but certainly a realistic projection. Those are the words that he uses in his note today. What do you think?
I'd say we agree. There's extreme resistance at 3,900. There's more resistance at the 200-day 4,200. And we would use that as an opportunity to think about risk management. And I think what that shows you is it's very dangerous, and you have to be careful whether you're a bull or a bear right now. If you're a bear, positioning is very one-sided. You saw record put buying for downside protection last week, and it often leads to big rallies to the upside. Sentiment's very weak. Markets are were short-term oversold. And what that did is it led to a coiled spring, and markets ripped yesterday. You're coming back today because some of the data that we saw in the University of Michigan numbers. But if you're a bull, let's look at the other side. Extreme lows in sentiment and positioning do not always coincide with market lows, Scott. We saw in the global financial crisis that sentiment and positioning reached bottoms in October of 2008, but the market didn't bottom till 2009 when Tepper came on your show and talked about it. So, and right now we have the growing risk of some kind of a shock to the system, as Steve talked about in the UK. So I think what you have to point to, though, is earnings and valuations are still too high. If you look at a typical recession, you're going to see, a 10% decline in earnings, and that puts us at 200. And so when you look at the valuations even today at $200 in earnings, that's really expensive, right? So when we think about allocating capital, though, now is a time to be thinking less about hunkering down in defensives and more about finding opportunities when we get to that 3,200 that Mark Newton talked about.
So
it's too late to sell.